Good morning, students. I am Dr. F.Andrews, Assistant Professor, PG Research Department of Commerce, St.Joseph College of Arts and Science, Autonomous, Cuddalore. Today we are going to the consignment account. Consignment is nothing but an agency agreement under which a manufacturer or a wholesaler send his goods at his own risk to his agent in a different place for the purpose of sale. So, in the modern age of competition, manufacturer and wholesaler have to use all possible means to push their sales. Consignment is one such method resorted to by them to secure sale of their goods in different and a distant place without opening branches there. So, who is consignor? The person sending or forwarding goods for sale is known as consignor or principal, and the person to whom the goods are sent is known as consignee or agent. For example, if X of Madurai sent 100 bales of cotton to Y of Trichy to sell on is B of and at his risk. The transaction between X and Y is a consignment transaction. X is a consignor and Y is a consignee. A consignment is not a sale by the consignor to the consignee. The goods are held by the consignee for sale. There is a change only in the location of the goods. Some difference between the sale and consignment. The sale involves only the two parties, seller and buyer, whereas the consignment involves three parties, consignor, consignee and the buyer. And sale is a contract between seller and the buyer, whereas consignment is a contract between the consignor and consignee. In case of sale, the buyer can dispose of the goods in any way. But in case of consignment, the consignee has to dispose of the goods as per instruction of the consignor. In sale of profit is realized when goods are sold to the buyer, whereas the consignment the profit is realized when the goods are sold by the consignee to the buyer. In case of sale, the risk is transferred from the seller to the buyer as soon as the transaction takes place. But in case of consignment, loss is to be borne by the consignor and not by the consignee, since he is only an agent. Some important terms of consignment account. Pro forma invoice. When goods are sent on consignment, they are usually accompanied by the statement known as pro forma invoice, which contains all the particulars of invoice like nature of goods, number and quality, grade, etc. Generally, pro forma invoice price is always higher than the actual cost price if goods are sent by the consignor on pro forma invoice price basis. Commission. The remuneration to the consignee for selling consigned goods, it is usually calculated upon the gross sales realized by the consignee. Delgreed commission. Sometimes the consignee undertakes the risk of bad debts arising from the credit sales on consignment goods. If consideration for the extra risk borne by the consignee, the consignor allows him an extra commission over and above the usual commission. The extra commission is termed as Delgreed commission, overriding commission. Consignor wants that his goods should be sold by the consignee at a higher price than the one which is prescribed by him. Then he pays the additional commission for his purpose to the consignee. This additional commission known as overriding commission. Goods in transit. Sometimes it so happens that the goods consigned by consignor do not reach the consignee on the date of closing of accounts as they are in transit. Such goods should be treated like unsold stock. The unsold stock need to be valued. Loss in consignment. Goods sent on consignment may be lost, damaged, or destroyed. Such a loss may be either normal loss and abnormal loss. When goods are lost or damaged due to normally expected but unavoidable causes like evaporation, leakage, breakage, it is called normal loss. Abnormal loss, accidental loss due to negligence, is termed as abnormal loss. It is unexpected and beyond the control of the consignor, like due to flood, fire, war, etc. Expenses of consignment. Both consignor and consignee have to incur some expenses for dispatching and selling goods. These expenses of consignment, non-recurring expenses and recurring expenses. Non-recurring expenses may be incurred either by the consignor himself or by consignee. All those expenses which are incurred till the goods reach the godown of the consignee are known as non-recurring expenses. This expenses only once on a particular consignment and increase the value of goods. Recurring expenses, it may also be incurred either by the consignor or the consignee. They are usually incurred after the goods reach the consignee godown. So they are of recurring nature and do not increase the value of the goods. How to prepare unsold stock? For example, Siva consigned 1000 kgs vegetable costing Rs 4500. Expenses incurred were Rs 600. If natural loss of 10 kgs and if 810 kg were sold, calculate the cost of stock at the end. So calculation of unsold stock. Siva consigned 1000 kgs vegetable and normal loss 10 kgs. So available for sale 990 kgs vegetable. Sold vegetable 810 kgs. So therefore unsold vegetable 180 kgs. The value of unsold vegetable equal to value of vegetable divided by after normal loss received from consignee into unsold stock. Vegetable value 4500 divided by after normal loss received from consignee 990 because 10 kg normal loss. So 990 kgs received from consignee into unsold stock 180 kgs. So therefore 818.1818 kgs Value of unsold stock. Value of unsold vegetable 818.18. Add non-recurring expenses. Total expenses incurred 600 rupees. We calculate unsold stock only. So the unsold stock 180 kgs vegetable. 600 into 180 divided by 990, 109.09. So therefore value of unsold stock 927.27.